All
Folks,
right.
we have a really, really special guest on the microphone today. As always, on Wednesdays, it's my goal to kind of reach out and chat with a trader and talk with someone and just kind of get their experience, learn a little bit about their story, hear about their background, talk strategies, and just kind of learn and grow together as we enrich lives and kind of progress through this battlefield that is the stock market ever so often. And this particular guest we have on the line, I met him in person a few weeks ago in Salt Lake City, Utah. He has an amazing smile, very infectious personality, amazing hugs, and he has an incredible story. So, Tony, I honestly, man, just want to say thank you for, number one, being here. And secondly, thank you for trading with me over the last, pretty much every single day for the last year and a half you've been here. So just want to say thanks, man.
Yeah, no, thanks for having me, dude. It's an honor to be here, and super excited to talk a little bit about my struggles in my life, and hopefully, I'm sure some people can relate. But yeah, it's an honor to be here, man. I'm so blessed to have found you, and I would be more broke than I am. Let's just say that if I hadn't found your group and showed me what I was doing. So I appreciate that.
Love it, man. People are going to talk about your story. Just tell everyone, just give us all the good details. You can go as long as you want. We have all the time in the world. Just give people what's the goods, the bads, the uglies, the greats.
Oh man, well, I help run a family trucking business in Arizona, and so I did that for nearly 8 years. Um, Great job, really consistent paycheck, and I'm a pretty religious dude, and I felt like there was just something we should move to Utah. My wife's from here, and so we pick up. I quit my good job, and we moved to Utah from Arizona. And I'm like, you know what? I'm gonna trade. This is what I feel like I should do. We're gonna make so much money. We're gonna do this. It'll be great. You know, it's my dream job. And so we come here, and I, I throw 30 grand into a day trading account, and then I go, all right, let's do this. My first day trading, I think I traded like 35 times, bro. 35 trades in my first day, and I came out with $100. I'm like, this is awesome. Well, that strategy worked. I think that was the only day that ever worked, and I was just getting murdered. So of course, I don't get another job. I don't get anything. I'm like, this is my full-time job. I'm doing this. And so we have savings, and that's it. That's it to our name. So I start getting this weight on my shoulders. Like, man, I'm not paying my bills. It's been a few weeks. All right, well, it'll turn around now, and I'm just looking at every video you have. I'm doing my darndest just to try to figure out how to do this. And I'm still just continuing to do everything wrong in the book. And so months and months go by of this, and not only am I not getting a paycheck, but I'm losing money every day. And so it gets to a point where it's just so stressful. And I'm like, man, this was probably the biggest mistake in my life. I don't know if I should have done this. And, I feel like I finally have my dream job in front of me. I love trading, and I'm probably going to lose this now because I'm going broke, and I need money to trade. So I call you many times that year and just kind of talk over my stresses, and you are just so awesome to meet with me and help me out. And finally, after a few meetings, after a few trials, I start to realize that I just have to let go. I have to stop caring. And as soon as I stopped caring about money, this was the brokest time I've ever been in my life. And months and months without a paycheck and paying a mortgage and paying all our bills. And I decided to go, all right, we're going to give my wife and I, she's amazing. And she's the most best trading coach. She's never traded a day in her life, but she emotionally just is the best trading coach in the world. But she's just like, let's give our money. We don't have any money, mind you. We're living off of savings, which are dwindling fast. I haven't had a paycheck in months. And we're like, let's start giving. So we start paying more, donations to certain places, to people that are struggling, paid more to our church, just donated anywhere that we possibly could. I had to learn how to let go of money. I had to be okay losing money and just stop caring about money. Money meant way too much to me. And as soon as I did that, I started this in May last year, so it's almost been a year. about August or so, I finally start breaking even. So I'm not losing money anymore on the month, but I still have bills to pay. So money is coming out of my account. So I am losing money in that sense, but I'm at least able to be a break-even trader. And so after a month or two of that, I'm like, this still isn't cutting it. I'm not losing anymore, but I'm not making money. And then you mentioned credit spreads in one of your day trading videos, just in the morning room. I'm like, what is credit spreads? You know, I trade options. That's how I mostly would trade. So I knew all about options and how they worked, pretty experienced with them, even before I started full-time as a trader. And I start diving into all your videos on credit spreads, online, everything else. And like, man, all right, well, I can do this. And then I start looking at it and going like, but you know, you're only getting a couple $100 a spread. That's not going to pay my bills. So I don't have a whole lot of money. I'm down. I literally have 25,500, and that's me just putting money in the account because I really should have had about $2,000 in there. So I'm about $1,000 over that day trading limit rule. And my wife's like, we're done putting money in. We don't have anything else. It's either do this now or get a job. And I'm like, all right, this is it. We'll get a job if this doesn't work. And I tried looking for jobs many times. It's just nothing really felt right. So I just stuck with this. And so I go, let's give this a shot. I said, this long-term credit spread, it's super safe, but I'm not going to make any money. So let me look what happens if I sell this. That expires in 3 days. And I go, oh, wow, I can get 800 for that. All right. Well, I go, all right, well, this kind of makes sense. And so I just started figuring some stuff out. And I started selling these things. And for the first time, I'm actually making consistent money. And it just grew and grew and grew from there. So I started having, for me, from going to losing 15 hours every month to breaking even. And then since really November till the present day right now, so about 6 months, I've averaged 20-hour months pretty much every single month, even through this crash. So it's been the greatest miracle. I finally found something that I can specialize in. And it works for me. It makes sense to me. And the more and more I do it, the more I'm able to build on strategies and cover myself to the point where it's getting really hard to lose on a trade. So it's just been the greatest blessing, but man, it's been a roller coaster. It's been a wild ride. And, I had to pay my tuition, so to say, but the most important thing was just, I had to stop caring about money. I still day trade, but I'm really picky on my day trades now because I don't rely on them for my paycheck. They're kind of just play money, but I'm only taking like 3 trades a week because I'm waiting for I have to be drooling over the gap for me to take that trade. And I went the entire month of December without losing on one day trade because I just chose my favorite ones. I became picky and then I stopped caring. I set my target, I set my stop, and I walked away, and I came back 6 hours later and said, oh, I lost money or I made money. And I just won on every trade. And I just accepted the loss. And that was a turning point, accepting the loss, just not caring. Who cares that you're going to lose this money? You take this trade, you accept the loss, move forward. If it loses, you lose. So it's been a ride, man, but it's pretty crazy. And I'm excited to talk a little bit more about these credit spreads we're doing.
Yes, we will definitely dive into some of the strategy portion of this, because I know a lot of people listening are going to be excited about that, and they want to hear more or less how you did it. Tell me just a little bit about you mentioned your wife, and this is something that I think a lot of people need to focus or spend more time on. You communicate a lot with her, man. Like, you share the ups and downs. Like, you give her a lot of the insight into your brain, and you kind of tell her what's going on and what your fears are. How does she handle that? What do you think her opinion is on you trading? You mentioned she's a great trading coach but never traded. So how does she know to help you?
That's a great question, man. I think as much as I grew, she grew. It took us 6 months to kind of figure the system out. And at the beginning, it was, I would lose $1,000 in a day, and she'd be like, you know what I could have bought with $1,000? And I'm thinking the same thing. I'm like, oh my gosh, this is just, and it just more pressure, more caring, and it just was going deeper into the hole. And so months and months of us just losing everything we had, we finally got to the bottom where we just didn't care anymore. And so that was one of the keys. But for her, it is it's just something natural that she has. Her and I, we've been married for 8 years now, going on 9, and just we've always had that part of our marriage that is communication, and we have a fantastic marriage. Love my wife to death, but she's someone that I can talk to and that I've talked to about hard and good my entire life. So trading was no different. It was easy to swing into that. But for everyone that's starting out, it's so crucial that your spouse or your significant other, whoever else it is that's doing this journey alongside of you, is invested as much as you are, because it is a tough road to go down. You know, this is the best paying job in the world, but you have to pay for it. You have to earn that privilege to make $1,000 in 3 minutes. I mean, it just doesn't come for free. You have to earn that, and your spouse is along with a ride. And so I know with Allie, it was really hard for the first 3 or 4 months for us, really hard. But we pulled out of it, and she just naturally, I've been listening to trading coaches for years, and she naturally will say things that I've heard them say in podcasts before, or something like that. You know, she was the one that told me to stop caring about money. She was the one that gave me that idea. And then it's funny because like a week later, I do an interview with you, Jeremy, and you say the same thing. And I'm just like, Allie is, you know, she's just there. She just gets it. She understood the game way earlier than I did.
Well, it's because she's smarter than you, man.
She's way smarter than me. I keep telling her, I go, Allie, I don't know why you're not the one trading and I'm not the one over there doing something else, because you are the trader in the family. You just don't know it. So
I love it, man. Yeah, where'd you get your passion for trading? Because you mentioned, okay, you're working with your family business, and then I got to move to Utah and trade full time. So where did that love for this thing come from?
You know, it is funny because I came across trading like 4 years ago. So I would, you know, I get a Robinhood account and I'd throw $500 in it and I would just mess around. Never made any money. And then a couple years back, I started getting way more serious and actually started learning. I'd listen to podcasts all day long of just different traders and their thoughts and emotions behind trading and how to be successful. And then watched every YouTube video known to mankind. And that's when I came across you. And so immediately when I saw you, Jeremy, you're like, first off, you know, I've paid money for courses and you're giving me better knowledge for free online. And that's how I knew you were legit. Any trader out there that actually trades that's worth listening to, they know how to make money in the market. They don't need your money from education. And so when you came out, I could just tell it's like, this guy actually trades. He doesn't just teach. And, you know, most people that can't trade and fail at it and lose all their money, they go to teach it because they love it, but they don't know how to do it. But right. You're different in the fact that you trade. This is how you make your money. And then your love of this and how much it's enriched your life, it's what led you to want to enrich others' lives. And that's what I caught on so quickly with. The first video I watched, I'm like, this is where I need to be. And so then I found out you have a trading room. I'm like, that's just perfect. So as soon as I moved out, I jumped on. But it's just something I caught on. I knew that I really loved to do it.
Yeah.
About 2 years ago, I'm like, man, I love this. And if I could do this for a career, I would be the happiest person on earth. It just kind of came, the more I looked into it, the more, and it wasn't really about the money. I could care less. I love the markets. I love the challenge. I love that it's just me and my success. You know, running a business for so long, you're dependent on 50 people showing up and doing their jobs for everything to work. And that's a tough gig. I was really excited to be able to say, you know what, if I screw up, I lose. If I win, I win. You know, it's on me and on my shoulders. And that's kind of how I like things to be. And so I just fell in love with it, man. I don't know how I kind of came across it, but I've always kind of dabbled and then got serious and then just felt like this is something I should do. And we're going to move to Utah now. And this is what I'm going to do full time. Just jump in. You know, once I turned 30, I kind of realized life is just too short to not go out and try to live your dreams. This was my dream. This was my dream job. And my wife's like, look, we go broke. Who cares? Start over and go get another job.
That's right.
And she was just great. I mean, she was in it from the get-go. It was harder when we're actually losing money, but life's too short to not go chase your dream. And my dream's finally starting to turn and come true. And it's just an awesome feeling.
Man, I love that so much. And that's the point. That's the thing I want to drive home for people in this interview is really at some point you got to look your worst case scenario right in the face and go, whatever, you know, bring it on. Like, sure. Is that going to happen? It could, it might, it could, you know, maybe it does, but whatever the worst case scenario is, it generally Tony, it's not that bad.
Yeah.
You know, worst case scenario, okay, lose all my money and then I have to go get a job.
Yeah.
Like that's generally most people's worst case scenario.
Yeah.
And that's not that bad. Like that. So you're living what everyone else does now.
Exactly. Everyone else is paycheck to paycheck, just start over. So yeah, it's that, honestly, that is the secret. And that is the secret to winning the markets. Honestly, it's that same thing. You just have to let go, accept the loss. And when you accept the loss, you don't need to move your stop loss in the first 5 minutes. When you accept the loss, you just accept your plan on that trade. And if it works, it works. If it doesn't, it doesn't. And over 100 trades, it should work more than not, especially with this awesome new trading plan we're doing this month. I've been doing alongside of you guys, and it's been awesome. So it's
killer.
Man.
Well, here's the part that I think a lot of people are going to love now. So let's go ahead and just kind of dive into the strategy. But before we do it, we're going to preface it by, we're going to start with all the negatives first.
Okay.
So I want you to walk me through the bad ones. I want you to walk me through the really bad ones. What's the risks? Let's just talk all the negatives, and then we'll talk all the positives.
Yeah. So the market doesn't give anything for free. So I have, over the past 6 months, I have like a 93% win rate. Okay. Which is amazing. It's unbelievable. I go months and months without losing. But with that comes, if you do lose, you lose a lot. And that is, that's the trade-off. The market won't give you anything for free. So either you can make a killing, but you hardly ever win, or you win all the time, but when you lose, it's big. And that's the story of credit spreads. So
bingo, correct.
You have to learn to accept it. I went from a $200 R day trading, and all of a sudden now I trade where if I'm wrong, I'm losing $5,000 in just one trade. And so that is, the risk you have to take, and you have to be able to change your mindset, because there'll be most days you're going to be down thousands of dollars. And I had to get used to that. It took me a month or two to get used to this, of understanding that, it's not day trading. I would think that my P&L is what it is right now. And oh my gosh, I'm down $1,000 and I start to figure out what can I do. But it's not swing trade. It's not a day trade. It's a credit spread. So it's different. So, those are some of the negatives of the fact of, when you lose big, and there's not much you can really do about it on some of those gaps. So with my strategy, really the only way I lose is on a big gap more than 3%. So how often is that actually going to happen on a stock? Not super often, but it will, and it has. And so, that's something I kind of prepare myself for. And I've built strategies to be able to help against that. But doing this, I've just had to learn that I will take some big losses. But in the meantime, I am making a lot more money to overcome that. So
love it.
It works out. But yeah, it's not all sunshine and rainbows. You have to be okay looking at P&Ls and seeing yourself down a couple grand. If you really, you could sell, granted, I sell big size on this because I need to pay for my bills. You could go very small. You could only risk, $500 instead of 5,000 or whatever the situation might be. But for me, in order to pay my bills, that's the R I accepted. That's what I deal with. And that's how I trade. So that's just me. It doesn't have to be that big, but
right.
Your losses are going to be more than you're winning.
Or it doesn't have to be that small.
Yeah, exactly. Yeah, right. It could go the opposite.
Dude, I love that. And that's beautifully well put and super articulated in regards to the losses on credit spreads, because yes, you're going to have a very high win percentage if you just even generally get close.
Yeah.
And then when you do lose, you're going to have some big swings, but you do need to learn how to protect it. So we're going to talk a little bit about that now. Yeah. As you go through your stocks, what are you looking at? Which ones do you focus on? Do you focus on them? Do you scan them? How do you find them? Give us that breakdown.
For me, what works, so short term is a lot more risky. Most of the time you're selling these credit spreads months away, which means they're very far away, hundreds of points sometimes, 20, 30% away sometimes. So for me, I'm selling at 3% away. I'm living and dying off of theta. So it's been a little tricky right now with really high volatility in this past market. So I've had to adapt a little bit, but it also opened up some other doors I'll talk to you about in a little bit that have been very successful. So I live and die off of theta. So I'm just praying that there isn't a gap overnight. Anything else during the day I can manage. So I'm usually getting about 3% away from the move where it's at right now, the current price. And I focus on, I trade the SPY, I trade Shop, Netflix, Amazon, Tesla, Boeing, and Chipotle. Those are kind of my list. So I tried to go outside of that, but they don't pay enough premium to make it worth it short term. So there's only a specific stocks that'll actually pay you the premium that you need to make it worth it. Selling it so close to expiration. So I'm always selling the week of. I tried to sell 2 weeks out because I could sell it farther away, and it was terrible. I didn't have one win because I'm giving myself 14 days for it to gap against me because I'm still not selling it that far away. And then Theta doesn't do a whole lot the second, week from expiration, but all your expiration is coming from Tuesday to Friday. That's when you start racking up money. And so I've kind of just narrowed it down. On Mondays, I usually will set up my spreads for the week. I usually will hit my target by Tuesday, 90% of the time. So I'm usually win by the next day, the next morning, just because Theta is so strong. And so I'm already selling it just outside the money. So I try to sell like 18 to 15 delta, somewhere in there. And so even if if we have a 0.5% move up the next day, you have that taken off the price plus your Theta overnight, and boom, there's my target. So I'm always trying to capture about 80% premium is what I'm trying to do. And like I said, I'm trying to time the market. So I'm calling short-term bottoms and short-term tops. So I'll go over one I did this week on Netflix. So if you go over to Netflix.
Yep, let's do it.
So on Monday, let's see, Monday was the 6th. So the coolest thing about credit spreads is that I can wait for confirmation. I don't have to get in at the perfect time. Now, credit spreads, if you want to make a lot of money, then timing is everything. But for me, I take confirmation over money. And so I'm looking at the 6th and look at the day it put in. So towards the end of that day, I went ahead and sold a 352 put spread. So bull put spread, 352. And I'm looking at the EMAs, and all those EMAs together, I'm looking at and going on the daily, I'm going, that's the iron condor right there, man. I mean, that's the iron wall. That's the, it's got to go through so much to take me out at 352. And so look at that reversal, look at the volume, look at the big bull move. We're not heading lower. And I'm saying we're not heading lower for 2 days. That's all I have to be right for is 2 days. So with credit spreads, I made $750 premium received on that sell. And all it has to do is stay above 352. It could be at 353 come Friday. It could be anything. And I make the full amount.
So was it 352 and 351?
It was 352.5 and 347.5. 347.5. So I always do, yeah. 5.
Got it. And your expiration was this week?
This Friday, yep. So the next day it pulled back, and I'm down. I was down about $800 the next day. But again, you have to kind of look at it and say, money's already in my account. I've already won. I only lose if it's below 352. That's why I was saying don't pay attention to your P&L. And so I already won. It just needs to stay above that level is kind of the way I view it. And so
you were actually down the next day, which is this day, you were already down some on your P&L. I was already down some
because if I would have timed it up right, then I could have waited till the next day and I could have made more money on that. That's what I'm saying on timing. But for me, I'm not so concerned about that because it could have gapped up the next day. I don't know. And then I completely miss out. There's no more premium left. And that's the level I wanted to be at. Another thing is too, every day you wait, that range gets smaller and smaller of the expected move. And so I couldn't sell the 352 and make that kind of money, even though, it came back the next day, which makes the most sense, right? But for me, I've missed out on so many moves trying to time it up right that I just kind of look at it and say, you know what, I'm happy with this amount. It's my target. It's where I want to sell it at. It's confirmed the move. I know it's probably going to pull back, but if it doesn't, then even better. So I went ahead and sold that. And then I always have a game plan. So that's why I'm saying credit spreads are hard to lose on unless it gaps. If it was to gap to 345, that next day. The odds of that happening aren't very big, but it could happen. If it did that, it would be hard to make money. Now, granted, that would be an extremely bearish gap. So I only sell my spreads where I know I would be so dead wrong that the move would be massive. And so same thing, like selling a call up at like 390, okay? If it broke that 390 and closed, it'd be so bullish, it would be crazy. And so what I would do is I would say odds are we're not going to go above that in the next 2 days, okay? But if we did, I would keep my spread open and I would simply buy calls. So if the next day we got to 381, I would buy a couple calls and then ride those calls up to 390. By the time it got to 390, I would be down on my spread. This is crazy. I'm sorry if I'm going too fast and everything else, but we can always backtrack, but I'd be down like $1,500. So my max loss is $5,000, but when it's at your strike, it's about $1,500 basically always. It just doesn't fail. No matter how much you get, it's because you bought a put and sold a put, you're at about $1,500 loss. And so all I need to do is make $1,500. So if I bought 3 calls at 381 and rode them up to 390, that's going to be more than $1,500. And then I would just exit out everything profitably. And so that's how I'd play defense. So how I actually did play defense on this other one was I put my close and said, if we, let's see, it was 357 was my alert. I have an alarm. I don't do anything until it either one hits my target of 80% capture or my alarm goes off. And when my alarm goes off, I have a whole bunch of different other rules of how to play it. But basically, I'd be buying puts because that's incredibly bearish. If we actually close below that little candle there, we'd be bearish. It'd take out so many bulls, it'd be crazy.
Yeah.
Which means we're going down.
What moving averages do you use on the daily chart?
Yeah, so on the daily, I kind of throw as many as I can. So sure. I have the 10, I have the 20, the 50, and the 200. Just to kind of give me, I use each one of those as a potential support or resistance, just to kind of give me an idea of, okay, it could bounce here, it could also bounce here, it could bounce here. And so I always try to give myself a couple lines of defense before I'm wrong. So you would have to, it would have to take out that EMA at 366, and then it would have to take out my alarm over at, 357. So it has 2 levels of defense. So basically, one's kind of my alert zone going, all right, if we were to take 366 out, it's still going to win, but I need to start paying a little bit of attention to it and just kind of prepare myself, make sure my game plan is where I want it to be. So before I take a trade, I sit there and I go, where would people be dead wrong? And that's where I'm going to sell my spread. So they would be dead wrong below that 352 level. I'm going to sell my spread there because odds are it's not going there. But if it did, it'd be a big move and I'd be able to recoup my losses and probably make money. So most of the time I make more money when I'm wrong than when I'm right. So odds are if we were to gap down that next day and take out that big bull candle, I would buy 5 to 8 puts and I would probably make $4,000 on top of the $1,500 that I lost. So I would walk out of there, around $3,000 profitable.
So to verify, when a stock like that is either gapping against you on trapping some people, you're going to be buying a directional option.
Correct.
And you're going to lose on the spread most likely, but you're going to hold the directional option until the spread starts getting in danger. Then you're going to sell the directional option and then just close the spread altogether.
Yeah, so I've learned that most of the time the market will come back above my spread if I'm selling a put, because I sell it in such, I try to sell in areas where it's just either going to fake people out. And so what I do is I leave both open until I'm profitable. So if I had my spread, okay, so if it gapped against me and I bought those puts, I would ride that down. And let's say now I'm I'm down $1,500 on my put, but I'm up $3,000 on those puts that I purchased, my long puts. So then I would go ahead and just close everything out because I've already made more premium than I would have collected if the spread would have just worked. If let's say it traps me, let's say we go back down to, gaps to 355, runs down to 345, and then screams back up, and then we just rampage bullish from here on out. I would just get out break even on my puts that I bought, because I would try to buy them. Granted, that's what I'm saying. If the gap is massive, it's really hard to do that. But most of the time, the gap, if it would gap, it would probably gap to like 357-ish somewhere. So I would be able to buy those puts there and then just sell them if it got back above that level. Because like I said, they're just my protection. So that's kind of how I play it. I try to stay in the spread as long as possible, because odds are it comes back up and finishes out of the money anyways.
Very often. Very, very often.
Very
that's
often.
the case.
So,
yeah. Like I actually am in my credit spread plan, Tony, I have the plan of the stock's probably going to go in your spread at least once. Don't freak out.
Yeah, exactly. Yeah. Yeah. That's so true. And that's the hardest thing to do, because, I was trading with a $200 R. So like a $400 loss to me was like the death of everything. And I'm down 3,000 on like my second spread I've ever done. And I'm just like, I'm losing everything. I already have no money to lose, and I'm losing. And it came right back up, and I ended up making, everything fine. But you have to learn to just be patient and to be able to think logically, because odds are, it's got an 80% chance of finishing outside the money when I'm selling a 20 delta, give or take. So it's, just kind of keep logic in your favor and saying Netflix is not bearish. There's just nothing about Netflix that's bearish. So, even with that gap, honestly, that would probably take out and run for a mile. And that's why I would do that. That's why I sold that put, because I look and say, where would it be just dead wrong? And I would have loved to sell, the 335, but I can't when you're only selling it with 5 days left till expiration. There's no premium. So
right.
I find a balance of where am I comfortable? Where are people wrong, but what still pays me money?
Okay.
And
so you probably almost have already bought that spread back on Netflix.
I closed it the next day. I won on it the next day.
So today?
As soon as it gapped up, and ran down, and then it came right back up in the middle of the day. I got filled on it, and then it crashed back down again. So I got my 80% premium capture the very next day. I was already done. So that next day, even though Beautiful. It was a down day, I still was able to capture 80% premium. That's what I'm saying. Theta on this is amazing in the fact that you can lose 80% of your value in your option in one day. And that's kind of what I bank on. I don't hold anything till Friday. I'm usually out of everything in 2 days. Just because I win on 2 days. It's either I'm right or I'm dead wrong.
So generally you're selling your spreads on Monday, Tuesday, Wednesday.
Exactly. Yep.
And you're buying them back, relatively soon. Do you ever do weeklies over the next week? So for example, it's Wednesday or Thursday and you sell next Friday's expiration?
I have, and I got killed on them. I just wasn't successful. And I found that the market is more consistent on gaps when it's Monday, Tuesday, Wednesday than Friday to Monday. I've gotten killed so many times holding spreads over the weekend. The bigger gaps tend to just be over the weekend is what I found. And so it's not true always, but it just seems more consistent. And so I stopped doing that because I wasn't getting what I wanted out of them. And it, like I said, there's still a huge chance of any day there being a gap. There's no day that's better than anything else. You never know when some analysis is going to come out and say, just kidding, Netflix, I don't like you anymore. And then the stock just dies. Last week I was day trading some spreads, and that's something we'll get into in a little bit too, of how I've been day trading the SPY on Monday, Wednesday, and Friday with spreads. It's unbelievable, but it is just, like I said, you have to just weigh out odds, and then you just have a game plan. So I'm looking at that and saying, could it gap 10%? It could, but more likely it's going to gap a couple percent. Normal, 3% is a decent gap. And I have a game plan of what to do to make money when that happens. So if we were to take out that 355, done. It's going bearish. I'm going to buy puts. I'll be able to make more money on my puts than my spread is losing, and get out of them and make money. And that happens a lot. And so people know
we're going to talk about the day trading aspect of this too, Tony, because you're mentioning you're doing this not actively, but actively, in the sense of you're not watching it every minute of every day, but you do have the ability, as you mentioned, you're doing this for a living. You do have the ability to watch 5-minute, 10-minute, 15-minute charts, right?
Correct. Yep. That's it. This is my only job I have. I can sit here all day, and sometimes I do, but for the most part, I set my alarms. I have my targets, and I just need to leave because I overreact on big candles, and it's caused me to lose money before. So that just works for me. I have my alarm. Like I said, I don't care what Netflix does. As long as we don't get below 355, I don't care. It can go up, down. It can go whatever it wants to do. Sideways, I win. credit spreads are fantastic because if I was to do a swing trade, it has to go up, if I'm doing a bull swing. But credit spreads, it could go up, it could go down, it could go sideways. It just can't go straight down. You know what I'm saying? So that's why
Totally.
your odds of winning are so much higher.
Love it. Walk me through your most recent one on Boeing.
Yeah, so let's see. Boeing, I actually haven't sold one on Boeing in a little bit, and I should have. I missed so many chances to sell Boeing. But the thing is, whenever I hit my weekly target, which is usually Tuesday or Wednesday, I'm usually done for the week. And so right now I'm selling the 95. And that's just a naked put on Boeing. I'm selling 95 put because I actually don't mind owning shares there. So this is a little bit different from my strategy, but I'm trying to think when's the last time. The last time I sold one on Boeing was back on March 3rd. And it had that down day. It had kind of that support. And I went ahead and I can't remember which one I sold. It's been a little, if I go back in my notes, I could tell you, but I sold, I think I sold the 263 put, and that's a credit spread I did that. Let's see. I can't remember what day exactly that was, but everything was fine until, let's see, what, 5th, 6th. So on the 5th, my alarms go off and it pulls down and I go, okay, I'm going to wait for a retest. And it just waterfalls, man. I never got a retest. And I actually ended up losing 1,000 on that credit spread because I couldn't get in the protection that I needed. I was hoping it was going to bounce the next day and it gapped down.
Yeah.
So I said, I'm just going to take my 1,500 or whatever it was that I lost. And I got out. And the good thing I did, because it gapped down again and I would have been down $5,000.
Yeah.
So that was one where I got caught sleeping, but I learned a lot from that. I have way better protection strategies in place now. So that hasn't happened again. But the last one on my Boeing was one of my few losses that I've actually had, but it sucks because if I would have got in on my protection, my alarms went off and I was out and about. So I don't think I was home. And so I came back like 20 minutes later. And by that time it just waterfalled, never pulled back, never gave me a chance to get back in. And I was just done. So I have new rules now that I'm on call. If my alarms go off, I pull my phone up, I go through my plan, I get my protection in place because I would have made probably $4,000 on that trade instead of lose 1,500.
Yeah, by buying puts at the right time. Yeah,
exactly.
So when you mentioned your protection plans, like give us an idea what that is. What does that mean? What does it look like?
Yeah, so my protection plan, basically I have my alarms and I can't do anything until my alarms go off. So my protection plan is I figure out, I always buy in the money when I'm purchasing my long puts or long calls, whatever I need to protect. Simply because I don't lose as much value overnight when I'm holding it. It's just the decay is a little bit less than something out of the money. And so I usually will I have two things. Either I will wait for it to pull back into the group of the EMAs on the 5-minute chart. So it breaks through that strong support it shouldn't have. I usually will give it 15 minutes or so for it to confirm that it's going down and not just a trap, because most of the time it is just trapping people when it's that big of a support. And I just kind of wait for more confirmation. And then I wait for it to pull back to those EMAs. So whenever those EMAs are clustered, just like right there on the SPY, whenever they're clustered, that's when I'm buying my puts. So I try to buy my puts on a bull candle. So I'm trying to do the opposite. I don't ever want to be buying them while it's crashing. I'm always trying to be patient and wait for it to pull all the way back. So there's that option. And then option number 2 is I make sure if I'm buying some puts, I'm waiting for it to take out a bull candle. That has been pretty good indication that it's not a trap. It seems to work pretty good. And so this is all on the 5-minute chart. And so if my alarms go off, I'm kind of giving it 15 minutes to figure out what it's doing, because the last thing I want to do is buy 10 puts, have it come down and then just slingshot and rampage and then me lose $700 on those puts. And then now I'm basically break even for my credit spread or sometimes losing. So that's happened many times. So protection is tricky because you can make a lot on it, but it can also just trap you and say, man, if I didn't buy that put, I could have just stayed in my spread. I was never wrong anyways, and it just trapped me. So I really try to take my time before getting into it, because that is one way you can lose and turn a winning trade into a loser pretty quick. But either it needs to take out a bull candle, or it just needs to confirm and then pull back into the EMAs. That way, if I'm wrong and it just blows through those EMAs, I'm only losing $100. I get out real quick. And saying, okay, this is probably going to trap everyone. But you know, if it's closed for 15 minutes down below that support, and then it pulls back into those EMAs, the EMAs are all pulling down. It's below all the EMAs. Odds are we're heading lower, so I can usually just wait for the pullback and then grab those. So it is a little bit trickier because I am buying, 10 puts sometimes, because I have to overcome my $5,000 that I'm losing as it goes down. So
Definitely.
it's not something I can just buy one put.
Right.
Like I said, most of the time if you're at your strike, you're usually down $1,500. By the time it gets to my strike, I like to be ahead $1,000. So I like to have made $2,500 on those puts that where I'm long on. So that's kind of my protection. Yep. Another protection that I have too, which has just been, there's so many ways. Once you kind of get into options, there's just so many ways to protect yourself. So like on Amazon, let's talk about Amazon for this week. I sell a lot on Amazon. I don't know if I mentioned that one before, but that's probably my number one. The premium on Amazon is unbelievable. So yesterday, when Amazon pulled back into 2000 area, let me see if I can pull this up here on my side. I know what I'm talking about. We kind of put in that doji there, and then a strong bull candle. I went ahead and just sold a put at the money, well, just outside the money at 2000. Okay. So the price was at 2005. I sold the 2000 put. So right at it. So that, because I sold it so close, the odds of me winning on that were only about 50%, 50 delta, give or take. So the most I could lose on that was 1,500. And I locked in like $1,000, I think, on that, the premium I received. I'm trying to remember, but I said, you know what, this is a strong level. I think this holds. And then it just starts to bounce like crazy. I'm like, oh yeah, all right, I just picked this bottom. This is fantastic. And then it slowly starts creeping down all day long, and the market's going down. This is, yesterday when the SPY is just tanking. And I'm sitting there going, we're going to gap down tomorrow, and I'm going to be down $1,500 tomorrow. And so I just, again, my plan, I can't do anything until my alarm goes off on the first day. And then it actually ended up working out. So we didn't gap down last night. It's kind of the risk I take. I don't sleep very well sometimes. And then it started to pull up today. And so today, when it's just rampaging, I still haven't hit my target of 80% premium. And so what I was planning on doing was, if it took out that S curve at, let's see, what was it? If it took out that S curve at 2024, I would have bought one put, because by the time that one put would have cost me, I think, $600. My premium's $1,000. So no matter what, I'm going to come out on top of $400. No matter what, I'm going to win $400, even if I'm dead wrong and it continues to go higher. But if it broke that S curve, and by the time it made it down to 2000, I would have been up $1,000 on top. I would have made $1,000 on top of what I've lost from my spread. So basically, it turns it into a trade where I can't lose.
I see. Yep, makes sense. So what you're saying is this whole particular spot, you got the put sale down here, and you're saying, okay, I'm going to capture $1,000 on this one, mathematically. And if it breaks below here, I'll buy an option, and that option is going to cost me $600, I believe you said. Yeah. So if that option just goes to zero, and I just absolutely, totally balk on that and don't play it well, I'm going to make $400 regardless.
Yep. So it turns that trade into a trade where I can't lose. Another awesome way to do this is what I was planning on doing this morning. Was I was going to sell a deep in the money bull calls or bear call spread. So I would have sold the 2000 bear call spread. And what that does is it does the opposite. So if it goes below $2,000, I make $2,500. If it doesn't, I lose $300. So now I just turn that trade into, if it goes below it, I'm making $700. If it stays above it, I'm making $700. So no matter what, you can't lose, and you just guaranteed $700.
Yep. And it's a lot. Yep. And a lot of that with is the mathematical approach of these options, ladies and gentlemen. It comes down to timing. As Tony said earlier, it's just all about timing, because with options, you can do the perfect strategy at the exact wrong time and you're going to lose money. So, if you're buying calls right here and then you're buying puts down here, it doesn't really matter how you finagle your way out of it. You're going to lose on the trade.
You're going to lose. Yeah.
But if you buy calls here and then you buy puts here, right? Buy low, sell high. There's ways where absolutely, if you get enough positive equity curve on your calls and then you buy puts and you start getting positive equity on your puts, you can absolutely start finagling option sales and positioning yourself with the credit spreads or even debit spreads or, some type of ratio spread where you can make money mathematically regardless of what happens. It's just all about timing of your initial position.
Correct. Yeah. It's all about timing. And I follow Amazon every single day. Those stocks I follow it. And so I know, what happened, a month ago or a week ago at that level at 2000. And I just remember the sentiment of how things were. And something that helped me with that was the SPY for the past 2 days. So 2 days ago, we have that massive bull day, and then we gap up. And then we just, of course, it's a retest gap. After a massive bull candle, it's pulling all the way back to retest. Everyone's talking about how bearish we might go. But for me, I don't forget about how I felt 2 days ago when that candle was just rampaging higher. Nothing was stopping it. That sentiment hasn't left the market in 1 day. And so even though yesterday was a huge down day, I still sold a put right at the money because I knew that was a level that would probably hold. Is retesting that after a huge bull candle. We're bullish right now. And I don't care. I'm not good about sentiment for a week or two. I'm really good about sentiment for a couple days. And that's all I need to be successful. I just need to be right for a day or two. And then I can capture my premium. So actually, right when this meeting started, I didn't have to do anything with Amazon because my target was hit.
Killer.
But I had my alarm set at that S curve that I would have bought deep in the money, that credit spread, and locked in $700 no matter what it did. So, it's hard to lose unless it gaps big, because then you're playing in the middle of nowhere with hardly any levels to play around, and it gets tough. But as long as it happens during the daytime, I can hedge myself. Another cool thing about options is, that put is a free put. Like you said, it cost me $600, but I've already got $1,000 from selling that from that bull put spread. So that's a free option. And that's something I use when I day trade. Is I can hedge myself like crazy because it's for free. So you have any other questions, or does anyone else have any questions? We've gone through a million things and I've talked a million miles an hour. But,
doing great, man. Doing great. So tell me a little bit about how you day trade spreads on SPY.
Yeah. So let's go to, let's see, we can go back for the past. So the SPY is cool because it has expirations Monday, Wednesday, Friday. So that's when I day trade it. And I have very specific rules because, like I said, with credit spreads, I could lose $5,000 in 1 day if I'm wrong. So it is serious, but at the exact same time, if you know what you're doing, the benefit is it's not going to gap against me, so I can play defense on it, and I can wait for confirmation. Deepen the money spread, I can talk about that in just a second. So deepen the money spread is when you're selling a call, like if I was going to sell a call on the SPY at 272, I would want the stock to stay below 272. If I sold us a call at 270, which is below where the price is currently at, in order for me to win on that spread, it would have to finish below 270. So you see, I'm already wrong before I even start, so to say. So I get more premium out of it and I risk less, but it has to go farther for me even to be right. So that's what deepen the money is your chances of winning are less, and so it gives you a higher reward. You get more premium out of it, and you risk a little bit less, but it's harder to win on. So that's what that is. So if you're going to sell something deep in the money, so if you're going to sell at 260, you would get $2,500 premium, and you would only risk like $300 if it didn't close below 260 on Friday. Like I said, this isn't for, I guess if I was selling that spread today, that would work, whatever. But So one is out, one is in. What do you mean by that? I don't understand that question exactly, but basically deepen the money spreads, your chances of winning aren't very good, but you get a better reward and risk out of it. So whenever I am trying to hedge myself, I'll use deepen the money spread, saying, I don't think it's got a 10% chance of going below 260. That's where I sold my, I lose when it goes below 260. The stock is, 5% from 260. So what I'm going to do is I'm going to sell a deepen the money call, which means I only make money on that if it gets below 260. But if it gets below 260, I'm losing on one. So I make 2,500 and I lose 1,500 on the other one. So I come out a winner. So basically it's just a way to hedge against the credit spread that you sold. So there's that. So day trading, I always wait for about an hour of the market to be open for it to kind of make up its mind, form some levels. And so let's go to, let's see here. What date is this? Is this the 27th? I'm trying to remember exactly. Yeah, March 27th. Let's go to that one.
Okay.
We can kind of back trade that one was when I did. So we gap down. And again, I'm waiting until 8:30. I'll let you get there for a second so everyone can see it.
Got it.
All right. So, we put in that big wick and then we come down and then we do an opposite. And then I start to see volume come in. Okay. And so then whenever I'm day trading on the SPY, perfect. Whenever I'm day trading on the SPY, the cool thing about it is I can sell a spread, especially if it's earlier in the morning, like an hour after the market opens. I think I sold like the 248 bull put spread. And I got decent, I got like $900 premium for that. Okay. And so I go
248, 247.
Yeah. One. Yeah. And so my risk on that, I think was like $1,500, something like that. And so if it goes below 248, I lose for the day. And it's just one day. So it's quick. But my plan was, I knew there was a support there. It put in that wick, volume's coming in, and then I think go to the next candle, I think is when the really confirmed, okay? So another one, and then right there, that's when I sold that 248 right there. I waited for confirmation, volume and a close above that bear candle. I say, okay, I think that's our bottom. I sold it right there, and I got $900 premium out of it. So as long as it stays above 248 for that day, I got $900. I then made a game plan right there before I even got in it, saying if it took out that lower wick at, what was that, 251-ish, I have my alarm set there. If we take that out, I'm wrong. I'm going to buy 10 puts and write it down until I'm profitable, which means those puts are worth more than I'm losing on that spread. So that was my game plan. Should it do that? No, it shouldn't go back below that level. So that was my game plan. So I basically get a hedge, and those puts, they don't cost me anything. So I got $1,000 on that. Those puts for that day expiration only cost like 10 of them, I think cost me like $700, $650. So basically if I'm dead wrong, I'm still going to make $200 for the day, give or take. If I'm right, I'll make my full 900 if I don't get in those puts. But if it continues to tank, then I'm going to make, $3,000 for the day, because those puts are going to be worth way more than my spread was losing money.
Right.
And so I kind of just played it out. So I sold it right then. I was able to wait for the confirmation, and then I'm able to have a game plan. So I usually will wait for some type of S-curve. So here I'm starting to sweat, and I'm like, oh man, well, all right. I have my game plan. My alarm goes off. I know what to do. And so we can just kind of keep playing out the rest of the day however you'd like. But basically, I just left my computer, and I was like, if my alarm goes off, I know what to do. So we keep playing. Again, I've already made my $900. Doesn't matter if it goes up or down. By this point, it's already gained like 70% premium by this part of the day. And then it just keeps going and going, and I just let it expire, kept my full premium, I'm pretty sure. I'm not sure what. Yeah, so we have a little bit left. At this point, right there, I got out, and I collected like 90% premium. And just because we might have a huge sell-off, it's been doing that. So if I'm up, 90% of my premium capture, I go ahead and get out of it and sell it off towards the end of the day. So I don't know how the rest of the day closes or if that was the close, but I got out for 0.10 right around exactly. So that's what I didn't want to have happen, was that sell off. And I still would have won, keep in mind.
Yeah, still would have won for sure.
Still would have won.
But it would have freaked you out a little bit.
But it freaked me out a little bit. So for me, I've had one, I think a week and a half ago, where I lost on a sell off at the end of the day because it didn't move 5% away from where my spread was. So I just kind of made it a rule. If I am up a lot, if it's towards the end of the day, if it's after, for my time, Mountain Time, noon, and I'm up more than 80%, I can take it if I want. And that's exactly what I did there. And then I was done for the day and I came back and was like, oh man, that thing sold off, but again, still would have won. So day trading spreads is fantastic because I get to wait for confirmation. It's really hard to lose. And the fact that it can just go sideways the entire day and I still make $900. I mean, for me to make $900 on a day trade, it's 3 R's. I don't think I ever had a 3 R day trade in my life, but I can do that and sell a credit spread and make $900 and have a 70 to 80% chance of it working. And if I'm wrong, then I can make $3,000 to $5,000 in one day because those puts are just racking it up. I'm trying to sell it in a place where people would be stuck.
And to make sure people are aware of this, again, as Tony said, SPY has 3 expirations. So Monday, Wednesday, and Friday. So you could sell on Monday. You could sell the ones that expire on Monday. On Tuesday, you can do the ones that expire on Wednesday. And on Wednesday, you can do the ones that expire on Wednesday.
Exactly.
It's pretty cool.
So that's what I've been doing. On Monday, I've been selling my weekly normal spreads. And then I also am day trading with spreads on Monday. And then I'm day trading with spreads on Wednesday. And then I'm usually done on Friday. Fridays tend to be so crazy that it's hard to make money. The only times I've lost on a spread during a day trade was on my protection. I haven't lost actually from it really crossing my credit spread that I sold. I think one time it did, but it's usually when I get like whipsawed in. So like it would, close below my thing. I follow my rules perfectly. And then it just rampages higher and I lose $1,000 on those puts that I bought. And then, that's usually the times where I would lose is the protection. So you have to be kind of careful because when you're day trading spreads, you don't have the luxury of kind of being able to wait. Like for me on a normal weekly spread, when my alarm goes off, I'm probably still 30 to 40 points away from where my spread is from where my alarm is, on Amazon or whatever. Mm-hmm. I have time to make sure this isn't a trap. On a daily spread, when I'm selling it on a SPY, I don't have 30, 40 minutes to see if it's a trap or not, because by that time it's hitting my spread. I'm already down $1,500 and I've lost a chance for me to protect myself. So it does get tricky when your alarms go off day trading. It doesn't happen very often, but you just have to have nerves of steel, really. You have to just think logically, what's a trend? What's the sentiment? What's the news that just came out? These levels shouldn't break. What does it mean when they do break? You have to have a really good idea of market and then just be able to logically think things through instead of emotionally. There were a lot of times where I was down, I sold a spread for $900 day trading, and then I was down like $2,000 on my protection because it just whipsawed me on the SPY. And this is back, last week when the SPY is moving 5% in a day.
Right.
And I'm like, well, crap. So I sold half my position. I lost $1,000, and then it immediately reversed and came and took out my spread. And so I actually ended up losing like $1,500 that day. So that stuff will happen, and it gets pretty tough. That's why I stopped doing them on Fridays, because Fridays just tend to just get nuts. But if you have a general sense of how to trade, how to day trade, and what to look for, selling spreads is fantastic because, like I said, it just gives you a buffer to be wrong. Mm-hmm. It just needs to stay above that level. That's all it has to do, or stay below that level if you're selling a call. Right. And you get a buffer. Not only it's kind of like, if you were day trading, wherever you put your stop at, that would basically be like your target almost, if that's kind of how it works, because I can sell a spread down where people are putting their stops. And where people are getting stopped out, I'm still correct. And like I said, it just gives you a lot of opportunities to be able to make money in the market. And it really doesn't matter if it goes up, down, or sideways. Don't go straight down.
Yep. So I love it. Last question for you, Tony. Kind of tell us a little bit about your profit profit and loss potential in regards to, do you ever pull out money? Do you collect your gains? Because as you mentioned, 93% win loss, but the losses are pretty large. So do you pay yourself monthly, daily, weekly, the bills? How's that whole process work?
Yeah, I pay myself weekly. So I kind of just reset every week. It's kind of the mindset that I have. Um, and I have goals for the week. Once I hit those goals, I'm done. I've found that, especially towards the later end of the week, Thursday, Friday, rules don't hold as well as they really should, especially on Friday. And so that's just kind of what I've found out. And so if I've already hit my target come Wednesday, I'm done for the week. I just, there's no point. I will still wake up and day trade if there's any gaps I like in the morning, but for credit spread wise, it's not worth it for me. So I have my goals set each and every week of what I need to pay my bills, and then extra to get ahead to cover those weeks where I lose, because they do happen. I always set aside a slush fund for the times where, it's just the market's going to gap down 10% and take everything along with it, and I'm going to lose 15 grand in a week. It's just, that's going to happen someday. And so that's basically how I set aside my things each week. But yeah, I kind of take it a weekly basis and take my profits, set my targets, set my alarms, leave it alone and let it do its thing. And either I'm right or I'm wrong. But
yeah, the big takeaway from that, man, is, and this is going to sound crazy, but you mentioned setting the stop, setting your targets and setting your alerts and going, okay, well, this is what I'm just going to do. I'm going to leave it alone. I'm not going to fret. A lot of traders, that's the part that's the hardest, is just the waiting and the chilling and the not doing anything.
Yeah. Yeah. And I still struggle with that. My wife, again, best trading coach in the world. My wife called me out 2 weeks ago, was like, Tony, you're getting impatient. You're getting a little scared. I'm like, you're right. And, kind of had to reset myself because, especially after this past crash put a lot of fear into me.
Yeah.
So, I came out of this crash with one of my best months I've ever had because, like I said, I lost on a lot of my spreads, but I was able to get in my protection. And so where I'm only making $700 credit, if I was right on the spread, I'm making $4,000 on each one. So I came out just crazy ahead last month, but it put a lot of fear into me because now the market's making these massive moves and my theta isn't decaying. I would sell something on Monday and Wednesday I'd be up like 3% and I'd still be break even. I'm like, you gotta be kidding me.
Yeah, it's weird, huh?
It's crazy how the market is. Yeah. So the volatility's through the roof. I live and die off of theta. That's how I make my money, is just, I don't have to be right. I just need to let options decay. And it decays so fast in the last week of your option. And it taught me a lot about buying options. I used to do swing trades a lot with the same week. I'd buy that Friday's expiration on Monday for a swing trade. I don't do that anymore because theta just destroys them in the last week. You have to buy them a couple weeks out or 3 weeks out just so that you're not getting killed. Because for me selling these things, that's how I'm making my money, and that's how someone else is making their money when I buy, a put for a swing trade or something.
Love it. That's fantastic, man. Just a really, really good breakdown. Here's the other thing too, ladies and gentlemen, for all of those who are asking questions, Tony is a real life trader. He's been a part of the community for a very long time. So you're welcome to reach out to him and ask him questions or just chat with him, get to know him. Great dude. I met him and Alex, like I said, back in Salt Lake City, Utah, Park City, technically. And we will be interviewing Alex next week. But man, Tony, first of all, man, just thank you for your energy. Thank you for your honesty. Thank you for your transparency and just sharing your strategy with us, because the beautiful part about the market, there's so many ways to make money. It's insane.
Yeah. Yeah, for sure.
It's amazing. So thanks, man. And again, I'm really excited about all the great things to come down the future. Like, we're just getting started with this, and the amount of things that you're going to be able to do and the amount of things you're going to be able to accomplish, and you're going to start getting better and better and better. You're going to get a really good feel, and it's just going to be wonderful to see your journey, man. I couldn't be more proud of you.
Oh, hey, thanks, man. I appreciate all your help. Thanks for being there for me when the times were rough and when things are happening, just the crazy times I had last year. But, it's turning around. We're turning the corner, and it's a blessing, man. It's a blessing to know you and be a part of this awesome community. And guys, stick in it. Stop caring about money. Easier said than done. Set your targets, set your stops, make a game plan and stick to it, and you'll be right more often than not. But accept the loss, man. That is the secret to unlocking the markets. You have to control yourself to control the markets. And a big part of that is just stop caring about money. Accept the loss or don't take the trade. And if you accept the loss, you're good. You don't have to move that stop every 3 minutes like I used to. And, just you'll let it hit your target because it will. And yeah, guys, thanks again for your time. I'm sorry it was crazy fast, but man.
No,
again,
man, that wasn't fast. That was beautiful. Don't apologize. I could have done that for 4 more hours. That was absolutely epic. And I promise this is going to be a very listened to interview because there's a lot of people that love credit spreads. I love credit spreads, man. I think they're a phenomenal tool, and I implement them all the time. So I think it's a great strategy to know of and have in your tool belt. And it could just be something you can implement ever so often as you grow and progress. And, just having them and knowing them and being able to use them effectively, it's incredible.
It's amazing. I mean,
Yeah.
it's unbelievable. Just if you guys are looking to make another $300 a week, it's just easy money. So it's just, whatever your goal is, credit spreads are a great tool to know and a great skill to have.
Love it, my man. Thank you so much again, Tony. Have a great rest of your week, and I hope you crush it, my friend.
Hey, thank you so much, Jeremy. You too.
Yep, you got it. All right, traders from around the world, there you have it. A real life trader brought to you by himself, Tony, just being an absolute hero, his wife being a great support. And it's amazing to have just a wonderful community of people who are really just enthralled by trading. We have 339 people right now actively here in Slack that you are welcome to communicate with and message with and chat with and learn their story and hear about their strategies and just learn from them. Next week, we're going to be talking with Alex, who does extremely well trading options directionally. So we have 2 totally different viewpoints, which is absolutely phenomenal. And both traders live in Utah, and both traders are profitable, and both traders have 2 totally different strategies. So I hope you appreciate today's energy and time by Tony. Thank you so much for everyone for being here. I will see you all later. If you're watching this on YouTube, make sure to give some love to that subscribe button. Click the up like button. Throw in some comments if you have any questions for Tony. Join Real Life Trading. Ladies and gentlemen, we are a wonderful community where our mission is to enrich lives. Go to reallifetrading.com. Click on live trading. Let's make it happen. You guys rock. And until next time, love life, live life, and trade it. Bye.